Brilliant, let's get going. Which actually was slightly early, so I'll just pause for a moment. But while I'm waiting for others to join us, let me just start by saying a little bit about what we're going to talk about today. I'm going to keep this nice and short, and I'm going to keep it very practical. So let me just get the slide going. Right, so we're going to talk about today how to day trade the Dow. What I'm going to do is I'm going to give you a very short presentation of just a few slides. I'm not going to bore you with slides. And then going to go straight into the markets and look at what's been happening at the open over the last few days. And then you can see how to start to apply this and make proper use of it. Obviously, I'm not going to all I'm going to do is just give you an introduction to my system and what we do in the trading room, and then invite you to come along if you want to join us in the trading room, which operates Tuesday to Friday for the first 40 minutes of the open, and then I have an alert system. So if I'm doing other trades during the day, for example, I gave out an alert a couple of hours back about the gold. I bought the low in the gold. Let's have a look at what that's doing at the moment. I can't see that at the moment. Okay, let's leave that. Um, and yeah, so that's what I do. That's how the room operates. That's what we get involved in the room. Let me just make sure there's nobody waiting to get in. I don't think there is. Okay, so we'll look at the Dow. We will look at other markets as well, but we'll focus on the Dow and look at how that's behaved over this incredibly volatile week. Any questions, type them in the chat box. Otherwise, I will carry on. If I don't answer your questions immediately, I will come back to them. So I run Scalper School, so we're looking at day trading the Dow under the heading Scalper School. And yeah, I developed this system a long time ago, back in 2005 and 6. I started day trading oil, but I quickly realized, well, once oil was really volatile in that period as it ran up to $100 into 2007 and the financial crisis. But if you the daily pip range of the Dow is really nice and wide. It's much more volatile, and the more volatile the market, in my book, the easier it is to trade. Um, can't go into too much detail about that today, but I will do that. We'll talk about why volatility is so important another day. Okay, disclaimer, trading carries risk. We all know that. You can't expect to be a consistent profitable trader unless you've got a really thorough risk management system in place to protect your capital. Yeah, so I think a lot of people come into day trading without stopping to think about what they want from trading. Obviously, we're all in this to make money, but it's not as simple as that. It's about how much time you've got available, size of your account, your type of personality. Some people are very patient, other people are very impulsive. You know, all these things matter. They may not be obvious to you at the outset, but they all matter about and have a major impact on your long-term profitability. So that's one of many reasons why I've set the trading room up and why I think it's worth your while joining us in the trading room. And here's one of the key reasons. Every time I open my account, my broker says 71% of retail investors lose money. So, I teach this simple system, but not everybody sticks to it hard and fast. And it's that degree of discipline that's going to make the difference between whether you're successful or not. Okay, so 71% of people are chucking money away. The brokers love it. That's how they stay in business. That's why they employ so many people. But if you want to be the 29% that make money, then listen up. All right. You've got to trade a system. Discretionary traders don't survive. They're all part of the 71 that lose money. You have to have a system. I can't say that too many times. If you haven't got a system, then you ain't going to survive. You ain't going to see it through. Okay. Let's just get through. Tell you what, let's get straight into the charts. Let's come away from this. This is why I trade the Dow, because it's just so liquid. It's got a market cap of 12 trillion. Well, it was a lot higher than that until this decent pullback. You can see I took that from end of last year. But it's very volatile, it's very liquid, and that's exactly what you need for day trading because it just hold many more opportunities. All right, so what we got here is the Dow. Now let's just talk about how the markets operate. These markets are random. Yeah, they are not hard and fast scientific, they are random. So a lot of people don't quite grasp that. So that's why a system can only ever be, well, it's a really good system. You can get over 75, 80% results, success rate. You can make money on a system that has as little as 35, 40% success rate, but that's another story. Let's concentrate on high probability trading. Okay, so this is the Dow today. And today, so the market kicked off at 2:30 UK time. So that is where we kicked off. Now, let me just tell you what you're looking at here. What I'm about to show you is I'm about to show you a key couple of lines in this chart which really dominate my trading. And here they are. So the light blue line is the close from the previous day's cash market. So 9 in the evening for Brits and 4 in the afternoon for New Yorkers. So at 4 o'clock New York, this market closed yesterday at 38,720. And you can see the relationship with the last 15 minutes of trading yesterday and the gap and the relationship today. So the first 5 minute bar, it's a 5 minute chart by the way, first 5 minute bar went back into the closing range of the Dow, closed marginally lower, but immediately the next bar closed higher. Now, a couple of things that are significant about this. So if I range the first 5 minute bar, what's that telling me? It's telling me what, most importantly, we closed above the gap. So that's really bullish to hold the gap in the open. The second thing is this second 5 minute bar here, I'm highlighting, closed at 38.48. In other words, it broke the high of the open range. So what I'm looking for is I'm looking to see which way it's broken. So initially it broke up. The third 5 minute bar came back into the range, and the fourth 5 minute bar closed higher. So I'm interested in what direction the market breaks the first 5 minute range. It broke it higher, came back, almost touched the gap. They're at 740, and within 15 minutes or so, it's done a good 450, 500 pips. And the total range today is 640 pips. Actually, it's about 650 pips. 650 pips. So if you're trading a pound a point, or if you're trading the futures market at $5 a mini contract, that's a lot of points. That's a lot of money. Now, that's a particularly clean day. It's not always like that. I'm lucky on as I'm doing this presentation that it's given me a nice clean move. What can happen? I'll just grab my pen. What can happen is you'll get a move one side of the range and you'll get a move on the other side of the range. So which one do you choose? Well, that's where the other mechanisms in my system kick in. Because what I've got here is what I trade with in the room is what I call an anchor chart. This anchor chart is a bigger time frame, and it looks at the range. Sorry, let's take this off because I'm making a mess. So it keeps me on the right side of a trade. I'm not going to show you that today because that's part of the program. Okay, so if you step back from this, you can see the closing range on Monday held. We broke the 5 minute range in the second 5 minute period of the open. We pulled back close to the gap in the first 15-minute period, and then we just ran. This line at the top here, this dotted dark blue line, that's where the markets closed at the end of last week. So we've gone about 2/3 of the way from the lows to that Friday close. We've done about 2/3 of the way into that range and then pulled back. Now that pullback there at 38,935 was also viable. The closing range is the last 15 minutes of the cash market. So in UK terms, that's 8:45 p.m. to 9 p.m. And that's what we had over here on the left. So that's the closing range of Monday, and that's the opening range on Tuesday. And you can see how close they are. So all the market's done. So it's actually moved right into 39,140 into the Asian period. It was bullish into the London Open, but the Americans won't have it. I mean, this is absolutely typical of the Dow. If the market has made a move before the open, the Americans market tends to drag it right back to where it wants it. That's why there's no point, I don't see there's any point at all in trying to trade this Dow outside of US hours. Because all the Americans, if it moves to the upside, all the Americans will do is drag it back where they want it. 9 times out of 10. Not every day, but 9 times out of 10. Now, if you get a move, there's various setups. Another setup is where you've got the market gapping up or gapping down. That's another set of rules and very precise rules. And you can manage your entry. In fact, when the markets gap up or gap down at before the open, that tends to make it more of a predictable trade because it's easy to manage. Here was an easy day to manage because it's matched the closing period and it's held the gap into the first 15-minute period. So that's really bullish. So the charts, so we've had a huge drop from 41,500 nearly on the first instance on the 18th of July to 38,400 roughly. So what's that? That's three and a half. It's about 4,000 pips nearly. 4,000 pips. If you look back at what happened last week when things were hairy and selling, so this is what happened last week. Where are we? That's Fridays. Let's look at Thursdays. So here's Thursday. Let me find the open range. Right, now this actually looked quite bullish into the initial period. That's the open range last Thursday before a huge drop. So note, what can we tell from this? Well, we saw the market push up to the upside today. This broke the open range in the first 15-minute period. It came back to test the low of the open range at 40,970, closed lower, and then continued to drop um, from 40,970. Where's the close? And the close was down here. So it dropped 800 pips. If you hold that into the close, once you get set up like that, most times it's best just to sit on the trade and let it run into the close. If you did that, you would have ended up with 800 pips last Thursday. So we've got a 650 pip range today and an 800 pip range last Thursday. That's why I like the Dow because it's just a monster. It's incredible. Doesn't happen all the time, but when it does happen, wow, it just really pays. Ka-ching. Okay, so let's go back to today. That's last night. This is the open, and we are still pushing higher. We've just printed a new intraday high here at 280, 290. All right, any questions? Any other questions? Let's have a look at the FTSE. You can see why I don't bother with the FTSE because it's just so slow. Let me just grab it. So this is already marked up for today. So the first bar was here. That's a lower close. So 8 o'clock this morning, we saw a range of 80.65 and 80.21. We spent um, nearly an hour in that range. So the Dow has spent 10, 15 minutes in the range. The FTSE spent an hour in the range. So you can see it's pretty obvious why I don't bother. I very rarely bother with this FTSE. And into the close, yeah, we went right back into the range into the close. So we finally broke down at 9 o'clock, went back in the range in the next 30, 40 minutes, came out, went back in the range, came out, and finished in the range. So that's a really choppy day that didn't really achieve much. Whereas this Dow is just um, an adrenaline charged market at the moment. Okay, let's have a look at gold. Gold looks a little bit like the FTSE. Let's have a look at the main volume comes in at 2 o'clock. So this is the 2 o'clock bar. So we pushed up. This is a good choppy day. Pushed up at 10 past 3, pushed down here at 3:30 UK time. And we're just trying to get back in the range there. So very choppy, very slow, not much going on. Um, not a lot doing. Okay, so so my system is designed to find out where the key entry points are and take a high probability entry. So today it broke the open in the first 10 minutes, pulled back to the gap. That's where I entered and sat in that trade, and I'm still in that trade even now. It's a good sort of 500 plus pips on the upside. Um, if you got a market like the FTSE, I mean, sometimes there are rare occasions where the Dow behaves a little bit like the FTSE and chops. But the anchor chart keeps me out of trouble. If I do suffer a loss, then I take the loss pretty quick and get out, and potentially close the market for the day if it's that choppy. There's a few days in the year I literally don't trade. I trade a lot later in the session on a Monday to avoid chop. And then my trading windows open Tuesday to Wednesday. So if you want to learn more about my system and what we do in the trading, etc., let me just pass you a link. So this is a link about Scalper School. I am running a program next week. So if you want to get involved with that, where's the chat box gone? Is the just reading your question, is the noise what goes on down? Yes, it's the close of the 8:55 bar. In other words, where we leave the market at 9 o'clock UK time, the exact point in which we're at 9 o'clock. So you're right, you need the 8:55 5 minute bar that closes on that 9 o'clock close. All right, so there's a lovely clean market today. The, the probability of making a profit if you're the right side of the previous day's cash close is 60 to 70%. If you're the right side of the Friday close as well, that adds another 20% to your probability. Sometimes when you trade between the daily previous day's close and the Friday close, you can get a lot of chop. On day like today, we've got a sweet move, and on a day like today, you could after 30 minutes into the open, you've made most of the move. 126 into that resistance. There's after 30 minutes of trading, that's where the market was. So we're not that far off where we were 30 minutes into the trading. That's why you don't have to spend a lot of time doing this. If you've got a tight range and it's hitting that range, take your profits. But here we are in summer doldrums, so we haven't got the volume and the real dynamic volatility to really make this push up. But anyway, if you took that, you were ending up with 720. That's a good 400 pips in 30 minutes. I don't know about you, but I think that's pretty handsome. Okay, so if you want to learn how to capture that, um, you can drop me a line from the website or the meetup group, and I'll give you more information. We can have a chat, and then you can come into the program. All right. Any other questions? So like I said, I promise you I'll keep this nice and short. What other markets are there? Let's have a look at oil. Oil's struggling today. This is a very, very major support underneath here. Well, that's even the oil's down a couple hundred pips. In answer to your question, yeah, the system, it depends on the day. It depends on the setup. Some days, um, my entries are gauged closely to the gap. Other days, it's about the relationship with the gap. There's five key points. There's five variations. I've just shown you one variation today, and that's why I've set the program up so that you can go through the intensive training and find out the variations. Once you've got all the five variations, it's very, very easy to determine what type of day you're looking at. And that's why the system's so high probability. The system is in the region of 76 to 83% profitable. So it's very high probability. And as you've seen today, you can be in and out in a 15-minute period. Any other questions? Well, thanks a lot for joining me, and thanks for your questions because that's useful. Um, it's only by asking questions can I see. Um, yes, absolutely. The whole point of the program is to have very specific entry points and very specific exits. Exits, you know what? Somebody once said to me, there's no such thing as a bad entry, only a bad exit. So the exit strategy that comes in the program um, one of the most important aspects of it. And as I mentioned way back in the beginning on the disclaimer, risk management is so the whole program pivots around high probability entries, risk management, including days when not to trade, and an exit strategy. And there are five key points, five types of setups that can come together and gauge and help you determine what type of day you've got and what type of entry you should be looking at. All right. If you want to have a chat, by all means, let me know, and we can fix the time just to have a chat about this. If you want to have a talk about the program, it's a small group, so it's highly focused. And then once the 40-minute room is shut, you get alerts of what I'm trading in oil and gold, and even future further trade entries in the Dow later in the day. For example, this pullback here in the Dow, if you miss it, this is the beauty of the trade. If you gauge the momentum on the right day using the system, that entry point there at 925 actually correlates, is right on the button to our entry system on a pullback in this system. So our system determined that 925 was a good opportunity to get in. So you could have gone out at that resistance at 150, got back in um, an hour, 2 hours after the open for another entry. If you want to pass over your number now, I can give you a call. We can chat more tomorrow. But otherwise, you want to drop if you are interested, drop me an email from the website, and I'll pick that up and either answer your questions or give you a call depending on what you want. All right, brilliant. Final call for questions. Otherwise, I will close this and go off and check my trades. One other thing on the meetup group, I have put folders of screenshots of some of my trades. I have not been doing it recently because I've been so busy. But if you look, there's a lot of albums on there showing a lot of trades. So please have a look at that, and you'll see some of my screenshots of my live trades. You can do this with a small account. Um, Obviously, it's going to take longer to build if you've got a small account. Otherwise, um, if you have got a large account, one of the key aspects will be getting you to manage your risk and making sure you're not overexposing that account. Brilliant. All right, no more questions coming in, so I will say good farewell for now. Watch out for events coming out. I'll be doing events every week from now on. I've just had a gap while I've been getting on with a few other things. But I'm going to do regular Tuesday night events from now on, which is what I always used to do up until recently. All right. Hope to see you again. Spread the word. By all means, introduce some of your mates and send them the link. And have a good evening. Cheers. Bye.